Your market news now. Asian markets saw a sell-off mirroring moves on Wall Street after a decline in U.S. banks. Shares of JP Morgan, Wells Fargo and Bank of America closed lower after Fitch warned it may have to downgrade credit ratings of dozens of banks, including JP Morgan Chase. Meanwhile, locally, Sun International expects that its interim profit could nearly double, but when adjusted for the devaluation of the Nigerian naira, it will only rise about a tenth. The group will publish its interim results on September 11th. However, looking at our markets, we are starting to see that we are a little bit weaker, even though our global peers are mixed. And that's on the back of some of the economic data that has come out of the U.S., possibly indicating that the Fed may have to stay higher for longer. Yesterday, we were all waiting for U.S. retail sales, which came in stronger than expected, up 0.7% month on month, and on a year-on-year basis, up 3%. Essentially indicating that the U.S. consumer is holding up a little bit better than expected. However, even though we did see a little bit of positive sentiment, that sentiment has been rather dampened by what we're seeing when it comes to the disappointing economic data that is coming out of China. However, to give us some perspective in terms of what is happening with the markets, we are joined by Chantal Marks, who's from F&B Wealth and Investment. Chantal, thank you so much for your time this afternoon. So take me through what you're seeing here in terms of market sentiment and what it is that's spooking markets right now.
Well, everything is really spooking markets right now. But I think that, as you mentioned, Chinese sentiment around China and the economic growth story there, I think, is really what is responsible for most of the weakness that we are seeing in emerging markets and for global risk assets generally. That, I think, is being compounded by uncertainty around the strength of the U.S. economy and what that means for interest rates over there going forward, and by extension the rest of the world. There are a couple of other idiosyncratic factors like the Fitch downgrade of U.S. debt, downgrades to U.S. bank credit, all of those things playing a role currently.
I've been asking quite a lot of the analysts who've been on the show in terms of what they believe to be the biggest risk for the Fed. Is it staying restrictive for too long, or is it taking the brakes off too quickly?
I think it's quite balanced at the moment. So it's very difficult to actually say which one poses the biggest risk, because each of those actually have quite important implications. Should the Fed become too restrictive, you can have a situation where it completely derails the U.S. economy and it takes them a while to get back to a growth scenario should that trigger a major recession. On the flip side, if they loosen too quickly, then you have a situation where inflation might not be out of control, and that has its own set of implications. Either way, the risk for policy missteps, I think, at this point in time is quite high.
On that note, then, when you look back on the conversations around what would trigger rate cuts, has anything changed?
So I think what has changed is actually what has stayed the same. The U.S. consumer seems to be in quite good nick, and the jobs market is very strong. And we saw from retail sales data yesterday that consumers are actually still spending as well, which means that they're quite comfortable with their current financial position. Of course, that could also be credit-driven, which means we could just be reaching the end of the kind of consumer spending cycle that we're in right now. But I think for now, nothing has changed, and that is the problem.
Okay, let's look at company news. Were there any news, both, say, locally or internationally, that caught your attention this morning?
Yes, so Sun International released a very strong trading statement this morning. And what I found quite interesting here is that we saw a very sharp recovery in these share prices and the earnings profiles post-COVID-19, but it seems to be persisting. And I'm wondering if there isn't a shift in the way that consumers behave.
Chantal, unfortunately, we're going to have to cut our interview short, and we'll continue it on another day.